Now, the news Oxfam's annual report reveals that the hidden engine of world economy is driven by the unpaid care of women and girls. International charity, which focuses on poverty alleviation, shows that just over 2,000 individual billionaires control more money than 60% of the world's poor population combined, and that it is the underpaid or even unpaid work done by the world's poorest women that generates enormous wealth for the global economy. Now, the report also highlights the fact that underpaid and unpaid work by women and girls add 3 times more to the global economy each year and the whole technology industry together. Joining me now from our London studio to discuss the U.S. Fed and also other market forces as well is Lukman Otunuga, a research analyst at FXTM. Lukman, it's good to have you with us. The U.S. Fed benchmark rates remain unchanged. Were you expecting this and why?
Thank you very much for having me here today. Yes, as widely expected, the Federal Reserve has left interest rates unchanged at their current levels, and we saw a muted reaction from the dollar. But I think the key takeaway from here is the Fed's commitment to make sure that inflation goes beyond 2%, meaning that for the foreseeable future, the Federal Reserve is likely to leave interest rates unchanged or even possibly cut interest rates if economic conditions in the United States fail to improve.
Indeed, Lukman. Yes, the dollar is muted, but what's the long-term implication of the U.S. Fed's move? What do you make of it?
So, as of now, last year we saw that there was a global easing. So we had the global easing train where many central banks across the world eased monetary policy in the face of trade uncertainty and slowing global growth. And we know that the Federal Reserve is the leader of the pack. So now the largest central bank in the world has decided to take a pause on rates. This could actually encourage other central banks across the world to follow a similar pattern. So that's the first thing. Another thing is the fact that the Federal Reserve is deciding to be on standby. This could result in a stronger dollar because last year we saw the dollar weakening on speculation around the Federal Reserve cutting interest rates. But if the Federal Reserve is seen maintain status quo on rates, this could appreciate the dollar, ultimately impacting emerging market currencies and commodities.
Indeed, Lukman. Is this indicative on global growth rate, you think, the Fed's recent move? I know not too long ago the IMF and of course the World Bank also made their forecast, but it's been rather marginal when it comes to growth, as it were. So what do you make of that development?
Exactly what you said. So right now, nothing has really changed. The same theme that we saw in 2019 has rolled over into 2020. Although concerns are easing over slowing global growth, I think global, fears around the global economy slowing in 2020 and 2021 still remain a major theme. And the reason why I'm saying this is because, yes, we have the phase 1 trade deal out of the way, but when uncertainty returns over the phase 2 trade deal, this is going to renew concerns over the global economy. And just to add to that, the United States is still in rude health when we compare it to Europe, the United Kingdom, and other major economies across the world. This is why the Federal Reserve could make its move and keep interest rates unchanged, while everyone else is still suffering from the uncertainties and the impacts of last year's trade developments between the United States and China.
Very good, Lukman. And still talking about uncertainties, US Fed also indicated that it will be on the lookout for further global threats. So in this vein, are we expecting more changes in the near term, you think?
I do not see the central bank cutting interest rates for the first half of 2020. However, though, now we've got new geopolitical risk factors to look out for. We've got coronavirus, the big elephant in the room. This presents a major risk to global economic growth, China, the United States, and everyone else. If the impacts of the coronavirus results in slowing economic growth from China and the spillover effects impact the United States, there is a possibility that the Federal Reserve makes the move to cut interest rates near the end of 2020. However, though, as things stand right now, it's quite difficult to assess the human and economic costs of the coronavirus to China, Asia, and the global economy. But uncertainty is still a major theme right now.
Indeed. And it's still a little bit early, but how are markets reacting to this development concerning the Fed move so far?
So right now, you can see that markets are surprisingly stabilizing, and I think markets are really trying to stabilize because the attention has been shifted away from the developments in China to more corporate earnings. However, though, moving forward, especially for the rest of Q1 2020, I expect uncertainty to still remain the name of the game. Right now, the coronavirus represents a major element of uncertainty, and nobody really understands or knows how negatively it will impact China and the rest of the world. And these fears are known should continue impacting global stock markets. I mean, for example, since the outbreak of the virus on January 20th, over 2.6 trillion worth of market capitalization have been shed for global stocks. And I won't be surprised if stock markets, especially emerging markets, continue to trend lower for the rest of the quarter.
Very good, Lukman, but I'd like us to focus on where you are at the moment. How's the UK market reacting to the latest Brexit move so far?
So it's quite symbolic. You know, it's been almost 4 years since the UK voted to leave the European Union, and tomorrow's going to be reality. Yesterday, the European Parliament rubber stamped the withdrawal agreement, and tomorrow at 11 p.m. GMT, the United Kingdom will officially leave the European Union. The pound could push higher based on this relief. However, though, what I do know is in this 10 to 11 month period, there's going to be more drama and uncertainty as the United Kingdom and Europe try to secure a post-Brexit deal. If it does look like the UK is going to leave Europe by the end of 2020 with no deal in place and will revert back to World Trade Organization rule, this could represent a major risk to the UK economy and really weaken the pound against the dollar and other G10 currencies.
Yes, you're right there. Definitely still uncertainty till the very last minute. Lukman, Otunuga, many thanks for your thoughts on this issue. It's always a pleasure to have you. It's good to have you.